It is Sunday, June 4th, 2017, and wouldn't you know it, it's a completely unrelated day typically to coin metal, but something really special happened today, and that was the release of the Verge BlackPaper. And so I decided that, I had to come on specifically just to do a live reading of it, just to make sure that everybody has the audio file to go with it. And but otherwise, this is going to be a typical episode of Coin Metal, and as such, we are going to go ahead and open it up with a first dance. But then we will be diving into the dark ruminations after all of this time. All of you people asking me in the IRC chat room, where is some documentation, where is some information about this coin? It will be revealed tonight, folks. We will be reading the Verge BlackPaper tonight on Coin Metal. And so in the meantime, we're going to go ahead and put in our first dance for the evening. And, we've been waiting all this time. You Gotta Believe by Anthrax. This one is off of For All Kings here on Coin Metal. And that was Megadeth, Dystopia, off the album of the same name. And so, as we've long awaited this, me in particular, because I've been around quite a bit longer than most of you, but we have been waiting for a definitive work, something to describe for all of us exactly what it is under the hood of Verge currency, what it is, how it operates, what its cycle times are. I mean, I can't tell you the volume of new people coming into the IRC chat room. It's been incredible that there has been so much interest in our currency after all of this time. And so I guess the pressure was just too much. That Verge Dev got together with some people and finally put it down in a PDF format for us to consume. And so that is exactly what I'm going to do on this very special episode of Coin Metal. And I'm doing it for a couple reasons. Number one, it's been a terribly exciting weekend, as all of you who have been holding and watching the coin all of this time and have known it would always eventually get some sort of notice. I believe this is only the beginning, and when I say that, I don't mean like pump and dump stuff. I mean, really, if it just stayed where it is right now and just leveled off for the next year, I would not be disappointed at all, because to me, Verge currency, what it's representing now is a cheaper way to move your money around in a far more discreet fashion than we're accustomed to with Bitcoin. And again, because the amount of actual documentation has been relatively rare, and I shouldn't say that, he's all over Bitcoin Talk, and if you really if you've been following the coin for any duration of time, you get a couple of key words that are associated with the coin, And if you do that long enough, when you use the Google, you use those keywords in association with Verge currency, and you can usually find everything that Verge Dev has been publishing up on Bitcoin Talk concerning this coin. In any case, without further delay, I'm going to dive into it. Verge, an anonymity-centric cryptocurrency by Soonrock and CryptoRect. Abstract, a cryptocurrency based on the Bitcoin blockchain, the creation of Satoshi Nakamoto, with multiple anonymity-centric network adaptations known as Tor and I2P. Included are other improvements, such as multi-algorithm mining capabilities, as well as black hole technology for IP obfuscation, which through electrum transaction simplification allows for instant transaction confirmations without a centralized authority. While people race to encrypt their transactions, we should ask ourselves a question. What good are encrypted transactions when they are still stored in a blockchain database with immutable timestamps, while the user's IP addresses are also timestamped and broadcast across the network? Verge will ensure that all transactions are fully secure and truly anonymous. Introduction. Centralized fiat currencies lay the foundation for a financial market structure that consists of all transactions being routed to one central exchange with no other competing market, where the supply can be artificially inflated. With this in mind, Verge was conceived in order to provide a form of decentralized currency to eliminate the problem of having one centralized location where transactions are processed. Verge solves this problem by limiting its total supply to be created and providing a multitude of various transactional options which provide not only a rich opportunistic environment for transactions via multiple platforms, but doing so with the additional benefits of anonymity-centric transactional applications such as Tor, I2P, and Electrum. Bitcoin was developed and released in 2009 in response to an inherent flaw in the way transactions were processed on the Internet. In his white paper, Nakamoto explains that commerce on the Internet has come to rely almost exclusively on financial institutions serving as trusted third parties to process electronic payments. While the system works well enough for most transactions, it still suffers from the inherent weaknesses of the trust-based model. Since its original inception in 2009, Bitcoin has been rapidly adopted into today's modern marketplaces. A primary issue with Bitcoin's rapid adoption is the increase of demand on the original blockchain to handle various degrees of large transactions. With increased demand comes increased transactional waiting periods, and this has resulted in an increased demand for higher transactional fees in attempts to try and speed up transaction confirmation times. The core innovation behind Bitcoin is its decentralized structure. Unlike traditional fiat currencies, Bitcoin has no central control, no central repository of information, no central management, and no central point of failure. However, one of the challenges facing Bitcoin is that most of the actual e-services and e-businesses built around the Bitcoin ecosystem are centralized. Due to the centralized nature of the current system, e-commerce is run by individuals in specific locations that utilize vulnerable computer systems which are susceptible to legal entanglements. Verge is one of the only truly decentralized currencies available today due to its standing commitment to building off of the core fundamentals of Bitcoin while bringing an entirely new layer of anonymity to fruition. The 2.0 Tor Network. To protect users against traffic analysis, which is a form of network surveillance that threatens personal freedom, privacy, and confidential transactional activities, the user's transactional traffic is routed through a number of global servers. Each of these servers removes the information of the previous server to the extent that the last exit node server ends up being unaware as to where the network originated from. As a result, Verge users can comfortably send and receive transactions of Verge over the internet with the assurance that the currency trail is virtually untraceable. The receiving end of the transaction and any watchful parties will not be able to link the transactions made to the original sending IP address. Figure 1.1 below illustrates how a Tor transaction occurs. And I will not describe that. When we post the PDF, or where it is already posted, and I believe it is, you'll be able to view it on there. Alright, continuing on. By utilizing the Tor network, Verge will achieve the following. Anonymous payments. Verge payments are completely anonymous and untraceable by attackers, government agencies, or anyone else for that matter. Fast confirmation times. Verge provides accelerated transaction times, meaning you can send and receive funds almost instantly without the slow confirmation times of Bitcoin. 3.0 I2P Network. A highly obfuscated tunneling service using IPv6 anonymizes all Verge data that is being sent over the network. Each client application has their I2P quote-unquote router build several inbound and outbound quote-unquote tunnels, a sequence of peers that pass data in one direction to and from the client respectively. In turn, when a client wants to send Verge data to another client, the client passes that message through one of their outbound tunnels, targeting one of the other client's inbound tunnels, eventually reaching the destination. Each participant in the network chooses the length of these tunnels and in doing so makes a trade-off between anonymity, latency, and throughput according to their own needs. The first time a client wants to contact another client, they make a query against a fully distributed network database, a custom structured database hash table based off of the Kademlia algorithm, figure 2. This is done to find the other client's inbound tunnels efficiently, but subsequent data between them usually includes that information, so no further network database lookups are required. When Alice wants to send a message to Bob, she first does a lookup in the NetDB to find Bob's lease set, giving her his current inbound tunnel gateways. She then picks one of her outbound tunnels and sends the data through it with instructions for the outbound tunnel's endpoint to forward the message onto one of Bob's inbound tunnel gateways. When the outbound tunnel endpoint receives those instructions, it forwards the data as requested, and when Bob's inbound tunnel gateway receives it, it is forwarded through the tunnel to Bob's router. If Alice wants Bob to be able to respond to the data, she needs to transmit her own destination explicitly as part of the data itself. This can be done by introducing a higher level layer, which is done in the streaming library. Alice may also cut down on the response time by bundling her most recent leave set with the message so that Bob doesn't need to do a NetDB lookup for it when he wants to reply, but this is optional. See figure 2.1 for an example, and we're not going to explain that one either. While the tunnels themselves have layered encryption to prevent unauthorized disclosure to peers inside the network, as the transport layer itself does to prevent unauthorized disclosure to peers outside of the network, it is necessary to add an additional end-to-end layer of encryption to hide the message from the outbound tunnel endpoint and the inbound tunnel gateway. This garlic encryption lets Alice's router wrap up multiple messages into a single garlic message, encrypted to a particular public key so that the intermediary peers cannot determine either how many messages are within the garlic, what those messages say, or where those individual cloves are destined. For typical end-to-end communication between Alice and Bob, the garlic will be encrypted to the public key published in Bob's lease set, allowing the message to be encrypted without giving out the public key to Bob's own router. A bare minimum set of cryptographic primitives are combined together to provide I2P's layered defenses against a variety of adversaries. At the lowest level, inter-router communication is protected by a transport layer security known as Secure Semi-Reliable or UDP SSU to SSU functions by encrypting each packet with AES 256/CBC with both an explicit for and MAC HMAC-MD5-128 after agreeing upon an ephemeral session key through a 2048-bit Diffie-Hellman exchange and station-to-station authentication with the other router's DSA key. Additionally, each network message has their own hash for logical integrity checking. Tunnel messages passed over the transports have their own layered AES 256/CBC encryption with an explicit for and IV, I guess would be it, or that reads for to me, and verified at the tunnel endpoint with an additional SHA-256 hash. Various other messages are passed along inside garlic messages, which are encrypted with, and I'm not even going to read it, it's like LGAML/AES plus session tags 2. 4.0 Verge Electrum clients plus servers. Verge-Electrum's focus is speed and simplicity with low resource usage. It uses remote servers that handle the most complicated parts of the Verge system, and it allows you to recover your wallet from a secret phrase. Additionally, Verge Electrum offers a simple and easy-to-use cold storage solution. This allows users to store part of their funds in an offline manner. Moreover, Verge Electrum is one of the only wallets to provide native Tor and I2P support. By integrating Verge Electrum with Tor and I2P, one can achieve anonymity while using the desktop wallet. IP addressing information as well as transactional information won't leak to the servers that the client is connecting to. Verge enables multi-signature support, which requires more than one key to authorize a Verge Electrum transaction. Standard transactions on the Verge network could be called single signature transactions because transfers require only one signature from the owner of the private key associated with the Verge address. A Verge Electrum transaction with multi-signature support required the signatures of multiple people before the funds can be transferred. The idea is that Verge becomes encumbered by providing addresses of multiple parties, thus requiring cooperation of those parties in order to do anything with them. Here's an example, and it's very similar to something else I seem to have read. Number 1. Verge Electrum wallet is on your own primary computer. The other on your smartphone. The funds cannot be spent without a signature from both devices. Thus, an attacker must gain access to both devices in order to steal your funds. Well, that's pretty spiff. Continuing on. Key features of the Verge Electrum wallet to note. Deterministic key generation. If you lose your wallet, you can recover it from its seed. You are protected from your own mistakes. Instant on. The client does not download the blockchain, it requests that information from a server. No delays, always up to date. Transactions are signed locally. Your private keys are not shared with the server. You do not have to trust the server with your money. Freedom and privacy. The Verge Electrum server does not store user accounts. You are not tied to a particular server, and the server does not need to know you. As a matter of fact, the Verge and I2P Electrum servers do not even get an IP address from the client. You can also export your private keys, meaning you own your address. No scripts. Electrum does not download any script. A compromised server cannot send you arbitrary code and steal your bitcoins. 5.0 Multi-algo support. I find this one kind of exciting, honestly. Verge is a multi-algorithm cryptocurrency that is designed to enable people with different types of mining devices to have equal access to earning coins. It is one of the only cryptocurrencies to support 5 hash functions combined on one blockchain. This results in increased security and a wider range of people and devices that can mine Verge, and equal distribution of Verge is ensured. The total supply of Verge is 16.5 billion. What makes Verge stand out from other cryptocurrencies are the 5 proof-of-work algorithms that run on its blockchain, namely Script, X17, Lyra 2 Revision 2, MYR Grosul, and Blake 2S. All 5 algorithms have a 30-second block target block time. The difficulty is influenced only by the algorithm's hash rate. This allows improved security, and since a wider range of hardware is required in order to take over 51% of the blocks and control the blockchain. 6.0 Conclusion. This paper introduced various concepts and anonymity implementations designed to improve upon the core fundamental concepts that Bitcoin first introduced back in 2009, with multiple anonymity-centric network adaptations known as Tor and I2P, multi-algorithm mining capabilities, and black hole technology, which through electrum allows for instant transaction confirmations without a centralized authority. While people race to encrypt their transactions, we should ask ourselves one question: what good are encrypted transactions when they are still stored in a blockchain database with immutable timestamps, while the user's IP addresses are also broadcast with timestamps across the network? Verge will ensure that all transactions are fully secure and truly anonymous. And I believe that is the end. Number 7 was some reference material here as well. But yeah, that was it. That was the the Verge currency BlackPaper. Honestly, I'm kind of excited about it because it's relatively simplistic, and I think one of the bigger advantages of us at this point is that we are such a small coin. With regard to transaction fees, that's something that's becoming a bigger and bigger problem for people on Bitcoin and Ethereum as well. And I believe this will continue on, with Litecoin and others, where they will be experiencing increased fees over time if they're not willing to upgrade their block size, honestly. I think if Bitcoin doubled their block size, they wouldn't be dealing with half the bullshit that they're dealing with right now. But you know what? I don't really mind because it's improving us. That more people are looking to us because of our lower fees and our faster transaction times, and they're saying, hey, these are advantages over Bitcoin. People whine about the 10-minute confirmation time with Bitcoin. We're at 30 seconds. Come on now. Give me a break. Anyway, I honestly was hoping for a little bit longer paper. That way I would have a little bit more to talk about here. This is it's all terribly exciting stuff. But you can always find Verge Dev on the IRC chat room, and I think that's oops. That's probably the best place to get information concerning the coin. Other than that, like I said, his Bitcoin talk stuff is pretty extensive. If you've had a question, he's most likely answered you on there. Anyway, we're going to go ahead and take a music break here really quick, and when we come back, we might do an article or two before we cash this short one in. And let's see, what exactly did we have in the lineup here? I've never played this song because it is terribly long, but I've been wanting to because it's a really good song. It's called Halo by Machine Head off of The Blackening here on Coin Metal. And that was Fear Factory with Digimortal. And so, after having read the long-awaited white paper for Verge, or black paper as the case may be in this, with regard to Verge currency, there's a use case you kept hearing in there, one about privacy. And I do have a couple articles for this particular episode, just short as it may be. And I wanted to touch on this base, because sometimes forget exactly why you would want privacy with regard to your transactions. And there's enough going on out there that I think we can enunciate the point that there is actually a necessity for that sort of thing in the 21st century. But first, I wanted to touch on one other thing, because this one I think is a bit more interesting, at least for the traders out there. And I think you'll dig this. This is actually on Bloomberg.com or BloombergQuint.com. Digital coins are making Bitcoin's rip-roaring rally appear tame. Forget U.S. stocks and emerging market assets, even ignore Bitcoin. Those brave enough to invest in the Wild West of tech are the ones making a killing. While the record-breaking rally in Bitcoin has captivated markets, demand for other digital coins is surging as companies raise millions in minutes, or even seconds, from investors wanting in on the next big tech startup. Last week, it took 30 seconds for Mozilla co-founder Brendan Eich to issue about $35 million of Basic Attention Token, the unit of exchange in a blockchain-based advertising platform built on top of the company's Brave browser. Digital tokens tied to the blockchain platform issued this year have more than doubled in price on average since trading started, according to data compiled by Bloomberg. Tech startups are increasingly selling coins that can be used on their projects instead of resorting to traditional financing methods such as venture capital. The sector isn't for the faint-hearted. The apps and websites behind most of these tokens are still only in the development stage. And I added the in there. They forgot one. Most are sold for pennies on the dollar, and volatility can be extreme. Taz, a closed-end fund dedicated to blockchain markets, had the coins it sold this year double in price in 5 weeks, and then fall 35% in 2 days. But if you can stomach the risk, the rewards have been substantial. Coins from the 15 ICOs this year, for which data is available, have risen by an average of over 100%, while shares sold in initial public offerings in the U.S. this year have gained 13% on average since they started trading. There's been overwhelming demand for coins, said Ron Quaranta, chairman of the Wall Street Blockchain Alliance. Sure, a lot of it is based on speculation and traders looking to make a quick gain, but there's also a fundamental driver, which is the anticipation that the digital currency market is maturing. Read more on how digital coins are letting startups bypass venture capital, and I'm not going to read that right now. 44 coins have been issued this year, according to blockchain research website Smith & Crown. Not all trade immediately after the auctions, since some have vesting periods. Read scam there, but that's just me. The tokens with the biggest gain, a 500% jump since it started trading on March 30th, was issued by Edgeless, which is building a decentralized gambling platform. The sale wasn't open to US-based investors since the company isn't licensed to operate in the US. You suck. Prediction market platform Gnosis sold the highest valued tokens this year. The GNO token started trading at $52 on May 1st and has more than quadrupled. Even with growing acceptance of blockchain from companies ranging from Toyota Motor Company to JP Morgan Chase & Co., some advocates for the technology say they're cautious of the digital tokens because of the exuberance sweeping through the cryptocurrency world. It seems like a fad. As a professional investor, it's not what we do, said David Dunn, president of Kingsbridge Wealth Management, who first bought Bitcoin in 2014 and is invested in blockchain-related companies. I'd rather invest in the companies using the technology themselves. The speculators might end up being right, and this becomes a solid investment because of the power of the technology, but we're not at that stage. Token sales like the one for Gnosis, which catapulted the company's market capitalization to over $300 million without it even having a product, or Ike's Bat coin, which was over in seconds, have raised some eyebrows. Still, the token market will probably continue to grow, at least in the near future, said Nick Tomeno, principal at San Francisco-based venture capital firm Runa Capital, who also runs the Control blog, which tracks digital currencies. More than $100 million of coins has been raised this year, surpassing total sales last year, while total issuance is expected to jump to about $600 million, according to Tomeno. There's a lot of hype and a lot of money being raised because it's so easy for anyone to create these coins without having to deal with any third parties, and it's so easy for people to buy them, Tomeno said. It can't be stopped. And he is absolutely correct. It cannot be stopped, nor should anybody bother trying. Because the further we go into the 21st century, the more we are going to find out that people like Ross Ulbricht were correct. That is the way to do things. This moribund mommy and daddy attitude about our customer, know your customer, CYA bullshit. We got to get over it. It's holding back business, and it's costing us a lot more than it's really worth in the long run. But far be it from governments not to at least try. And it's with that in mind that I'd like to read you the next two articles, and then we're probably going to close this one out short because this was a completely unplanned, total impromptu coin metal. Wanted to come out and let you guys know about the Verge BlackPaper, and we've already done that. So let's go ahead and finish it up for a couple of articles from today's news, or at least not necessarily today's, relatively recently, a few days. Some of the articles in the daily news that back up the use case of privacy in our transactions. China's new Bitcoin regulations to be implemented by June, and this was written on May 28th, 2017, and it is, I believe, still on altcointoday.com. And here we go. Earlier this month, major Chinese finance media company Caixin revealed that the People's Bank of China's newly drafted regulations on Bitcoin trading and local digital currency exchanges are set to be implemented by June. Until then, on-site inspections of the country's three largest Bitcoin exchanges, OKCoin, BTC China, and Huobi, will likely continue. Cakeson also reported that the inspections are close to completion and that the 3 exchanges will have to face administrative punishment before the new regulations are implemented. The local publication noted that Chinese exchanges will have to pay fines for their previous operations that may have violated existing financial regulations in China. Although the Chinese Bitcoin exchange market has made a strong comeback in the past few weeks after reclaiming its title as the second largest Bitcoin exchange market behind the US with 15% market share over the global Bitcoin exchange market. Chinese traders are still unable to withdraw their funds. Interestingly, over the last 2 weeks, an increasing number of investors have started to purchase Bitcoin on local Bitcoin exchanges, despite the temporary withdrawal suspension imposed on all 3 major Chinese Bitcoin exchanges. More than that, Chinese Bitcoin exchanges have begun to request an excessive amount of personal and financial information from Bitcoin traders who are simply purchasing the digital currency through regulated trading platforms. Local sources, including CN Ledger, revealed that exchanges including Huobi started to demand face-to-face interviews, submission of bank documents, proof of funds, proof of identity, and other documents. BTCC serves millions of users in China, along with Huobi and OKCoin. The company told its clients on March 24th, in compliance with anti-money laundering policies, BTC China has completed an upgraded Know Your Customer identity verification system. The new KYC system requires 4 pieces of identity information, including full name, national ID number, bank card number, and mobile phone number. However, regardless of the three exchanges' recent overhaul of their KYC systems, the 3 platforms will likely have to add changes to their systems after the release of the People's Bank of China's newly drafted Bitcoin trading regulations. The important aspect to consider about China's current Bitcoin trading ecosystem and the exchange market is that the demand toward Bitcoin is continuously increasing, even with suspension of withdrawal and strict AML policies. That means traders aren't necessarily purchasing Bitcoin to avoid capital controls and move funds outside of China. Traders are purchasing Bitcoin as mid to long-term investment with the intent of holding onto the funds. Therefore, if withdrawals are enabled and new regulatory frameworks are implemented, Bitcoin demand in China will likely surge, and Bitcoin price listed by the Chinese Bitcoin exchange market is likely to increase. Since late 2016, the Chinese Bitcoin exchange market has portrayed a value of Bitcoin that is substantially lower than that of other major Bitcoin exchange markets. If the Chinese market stabilizes, it could act as another catalyst for Bitcoin price surge and could trigger yet another upward trend for Bitcoin. Yeah, for the very, very short term. Until we actually see the Chinese regulators getting actually serious about trying to tax people on their Bitcoin purchases, and then the real excitement will begin. And so, I kind of expected that we would be seeing some sort of movement with regard to China and saying, yes, we can regulate Bitcoin, yes, we can regulate cryptocurrencies, and they're going to find out within a very, very short period of time, very, very short, that it is going to be far more profitable to just stay the fuck out of the way and let the shit happen. I mean, they've got an entirely different system over there, and they have more than enough ways to tax this enterprise without continuing to step even further harder on its throat, kind of strangle that innovation down. And that ultimately doing so will hobble it. And I think it's kind of a nuclear arms race kind of thing. Kind of that mutually assured destruction mentality of the 1980s and 1970s is that, okay, so you're a country and you're so threatened by Bitcoin that you're going to implement all kinds of trading restrictions and licensure and regulations and blah, 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 right? Okay, so you do that. Now, every other country on planet Earth that isn't doing those things has a strategic advantage over you. And that's really bad for you because in the digital age, we can find ways around your restrictions. So like say China does it and they implement it throughout their system, the tracking and all that bullshit. People will still find a way to transmit Bitcoin in and out of the country without the government knowing about it. And so there will be people taking advantage of the lower price for Bitcoin in China to be facilitating in transactions outside of China. It's just going to happen. And I think the suggestion that Chinese investors or Chinese people that are investing in Bitcoin or cryptocurrencies, that they're exclusively interested in long-term holding, I think is silly. I mean, I really think that is completely fucking silly. We're talking about transnational currencies. If you can find somebody else on the other side of the planet that will sell you real estate or some other commodity for whatever coin that you have, you can actually facilitate that transaction. It doesn't even have to happen within your national borders, and there's really no physical or digital way that you can control that transaction. The change of ownership happens, and then they just spend the next 2 months trying to figure out how to get from where they are in China to their new house in fucking Madagascar or the Philippines or somewhere in Africa. Point being, you can't stop it. It's just too fucking late. And trying to get in its way now, again, it's only going to hold you back in the longer term. I feel really sad for these westernized countries that have fallen into really repressive taxation regimes. I mean, like the UK with their fucking value-added tax, it's more like a point-to-point extortion scam. I mean, really, the state does not present does not create so much value per production step that they get a cut at that. I find the whole concept of it completely fucking disgusting, and ultimately I think it's going to hold back innovation there. I mean, maybe in the longer term, now that they've gotten themselves kind of free of the EU, as they migrate further and further away from that, I think it'll be easier for them because they'll stop looking for so many different ways to tax their people. Because you won't be trying to keep the rest of the fucking Eurozone with their lights on and everything running on the backs of the people of the UK. And ultimately, I think that's a good thing. Personally, I think globalism as it was envisioned for us is a flawed model. Because it still includes people that get completely disproportionately, unduly wealthy from the general operation of the thing, and to the detriment of the market at large. And fortunately, now we have cryptocurrencies and we can circumvent them. Anyway, so I've got another one here, and this one is on the Business Insider in Finance, and the title of it is, Here's Why Regulators Need to Get Serious About Bitcoin. And this is by Maria Terekova. No penis, at least none that I know of. Here we go. This story was delivered to BI Intelligence FinTech Briefing subscribers. To learn more how to describe, whatever. As Bitcoin price skyrockets and popular demand increases, some of the world's largest wealth managers have started giving their clients the opportunity to invest in the digital asset. If their people were really savvy, they'd be doing it on their own. Anyway, continuing. Last week, Boston-based Fidelity facilitated investor access to the asset on Thursday. UK-based Hargreaves Lansdown followed suit. Hargreaves Lansdown now gives clients the option to invest in an exchange-traded note that tracks the price of Bitcoin. An ETN is an investment instrument typically listed on a major stock exchange that can be bought and sold similarly to a stock. As more well-known wealth firms give their clients access to Bitcoin investment, interest in the asset by mainstream investors will undoubtedly rise. However, these firms also risk exposing consumers to the dangers associated with unresolved regulatory issues around Bitcoin. Bitcoin still exists in a regulatory gray zone, which makes it different from most other asset classes. Mainstream asset classes include securities such as stocks or bonds and tangible assets like art. The former typically have dedicated regulators like the SEC in the US, while investments in the latter results in the ownership of a physical product. In both cases, investors are clear about what they're acquiring. However, in most jurisdictions, Bitcoin is legally neither a security nor a tangible asset, and therefore does not fall neatly under any regulator's mandate. At the same time, most mainstream investors don't have a clear idea of the asset's nature. This ambiguity, compounded by Bitcoin's relative novelty, arguably means that Bitcoin investments are a special case and should be treated as such by existing financial regulators. Otherwise, it will remain unclear which regulators are responsible for consumer protections regarding the asset, putting investor capital at risk. The onus is on regulators to classify Bitcoin and increase emphasis on customer education. At the moment, only a few countries' regulators are making serious attempts to establish clear legal framework to define and regulate Bitcoin. And among those who have started, the approaches are very different. As such, regulators should start coordinating with each other to come up with an unambiguous status for the asset that clarifies under which regulators' mandates it should fall. Moreover, regulators should consider devoting the same attention to enforcing customer education among incumbent wealth managers as they have been to the marketplace lending industry. Nearly every global bank is experimenting with blockchain technology as they try to unleash the cost savings and operational efficiencies it promises to deliver. Banks are exploring the technology in a number of ways, including through partnerships with fintechs, membership in global consortia, and via the building of their own in-house solutions. Sarah Kosiansky, Senior Research Analyst for BI Intelligence, Business Insider's premium research service, has compiled a digital report on blockchains in banking that outlines why and in what ways banks are exploring blockchain technology, provides details on 3 major banks' blockchain efforts on in-depth interviews, and highlights other notable blockchain-based experiments underway by global banks. It also discusses the likely trends that will emerge in the technology over the next several years and the factors that will be critical to the success of banks implementing blockchain-based solutions. Here are some of the key takeaways from the report. Number 1. Most banks are exploring the use of blockchain technology in order to streamline processes and cut costs. However, they are also looking to leverage additional advantages, including increased competitiveness with fintechs and the ability to use the technology to create new business models. 2. Banks are starting to narrow their focus and are increasingly honing in on tangible use cases for blockchain technology that solve real problems faced by their businesses. Number 3, regulators are taking an increased interest in blockchain technology, and they're working alongside major banks to develop regulatory frameworks. Number 4, blockchain-based solutions will start to emerge in different areas of financial services. The most successful solutions will solve specific problems for banks and attract a large enough network to create widespread benefits. In full, the report, number 1, outlines banks' experiments with blockchain technology. Number 2, details blockchain projects at 3 major banks, UBS, Credit Suisse, and Banco Santander, based on in-depth interviews. Number 3, discusses the likely trends that will emerge in the technology over the next several years. Number 4, highlights the factors that will be critical to the success of banks implementing blockchain-based solutions. Interested in getting the full report? Here are 2 ways to access it, and I'm not going to do that because it's a bunch of membership business. So yeah, I don't know. I'm always goofy about quote unquote blockchain solutions, because my first question, and I always want to ask it to whoever who's talking about it, is who's going to mine your blockchain? If nobody's going to mine it, it's not really a blockchain. It's just a distributed kind of database kind of business. I mean, you can put a timestamp server on it and all that, but really, in the age of mutable blockchains, which apparently we do have, why do I want to trust people that are mining their own blockchain? They can go back and edit their own blockchain too if they're mining their own blockchain, right? And the whole use of bothering to mine the blockchain is so that we have a public record of the occurrences of all the transactions that occur on that network. This is to both secure the funds and maintain the fidelity of who exactly owns what at any one time. Personally, I believe these aspects of cryptocurrencies are being challenged on a number of fronts, and I don't expect that trend will end anytime soon. I think that if we do start to see a clear divergence toward more public-based currencies than those that are, how should I say it, trying to join hands with current industry insiders as far as finance goes, that we will continue to stay free. In all honesty, that's really where this technology belongs, is in the hands of average people. And we really don't need regulators telling us who should or who should not be able to deal in all levels of development and participation in cryptocurrencies. And ultimately, that is what regulation is about. And don't let anybody ever fool you about that. It's defining who gets to do what in this realm. And I believe Satoshi Nakamoto kept it open source for a very specific reason, because he wanted all of us to be able to participate in it, not just a bunch of top-down people that are interested in maintaining the current dependencies that are basically holding up the development cycle of this planet through finance. You can parse it any way you want, but it all starts with the funding, or the investment, rather. I've invested a lot of time and effort into this show. And so, whether or not that ever pays off, I don't know. And I don't really care. Because honestly, what I'm doing seems to me to be far more important than who gets credit for doing it. Just that somebody's out there doing it. And if I don't see a whole lot of hands that are that are raising up and saying, hey, I want to do it. So here I am. And that's how it goes. Anyway, this was a completely unplanned, impromptu, and spur-of-the-moment episode. And so we are going to round it out a little early. I would ride this one all the way to 11. But in all honesty, I haven't quite recovered from the weekend. So just doing this right now was kind of challenging to begin with. So we're going to go ahead and round it out, and what exactly to put on, I'm not entirely sure, but it's got to be Meshuggah. That much I know. And fuck it. Let's see, we got about 3. Yeah, Bleed. We're gonna do Bleed. So until tomorrow at 8 p.m. Pacific Standard Time, when we will be having our standard issue episode of Coin Metal. Until then, you can enjoy this episode, which I will be posting as soon as I possibly can on my YouTube channel. We'll also be posting links for it on my Twitter and Facebook, so you can follow me there, Frank Dashwood. You can also find it with the hashtags, hashtag CoinMetal. Also, I hashtag Verge currency on it and altcoins and stuff like that. So if you're looking for us, you will find us. And so until tomorrow at 8 p.m. Pacific Standard Time, I want you all to trade safe. I want you to be doing your homework, goddammit. And I want you to be watching out for your own bunghole, because there's most certainly nobody else out there that's going to do it for you. Thank you very much for listening, and you'll have an excellent evening.